Hello, and welcome to OTC, the online trading course. Today, we will explain a very important means of investment on the stock market: bonds. There are three basic kinds of bonds to choose from: government, municipal, and corporate bonds. What is a bond? A bond is a debt security under which the issuer owes the holders a debt and, depending on the terms of the bond, is obliged to pay them interest, the coupon, and or to repay the principal at a later date, termed the maturity date. Interest is usually payable at fixed intervals, semi-annual, annual, sometimes monthly. Very often the bond is negotiable. For example, the ownership of the instrument can be transferred in the secondary market. A bond is a form of a loan. Between the holder of the bond, the lender, the issuer of the bond is the borrower, and the coupon is the interest. Bonds provide the borrower with external funds to finance long-term investments. Bonds and stocks are both securities, but the major difference between the two is that stockholders have an equity stake in the company, whereas bondholders have a credited stake in the company. Being a creditor, bondholders have absolute priority and will be repaid before stockholders in the event of bankruptcy. There are several kinds of bonds. Government bonds. In general, fixed income securities are classified according to the length of time before maturity. There are three main categories: bills, debt securities maturing in less than 1 year; notes, debt securities maturing in 1 to 10 years; and bonds, debt securities maturing in more than 10 years. Municipal bonds. Municipal bonds, known as munis, are the next progression in terms of risk. Cities don't go bankrupt that often, but it could happen. The major advantage to munis is that the returns are free from federal tax. Furthermore, local government will sometimes make their debt non-taxable for residents, thus making some of the municipal bonds completely tax-free. Because of these tax savings, the yield on a muni is usually lower than that of a taxable bond. Depending on your personal situation, a muni can be a great investment on an after-tax basis. Corporate bonds. A company can issue bonds just as it can issue stocks. Large corporations have a lot of flexibility as to how much debt they can issue. The limit is whatever the market will bear. Generally, short-term corporation bonds is less than 5 years. Intermediate is 5 to 12, and long-term is over 12 years. That concludes this lesson. Thanks for watching.